Welcome to CBRE Cambodia's Market Insights for the third quarter of 2022. My name is Paula. I'm an analyst in the Research Consulting Services Department, and it is my honor to be your host for today's program. Today, CBRE Cambodia has the great pleasure of bringing back this very signature event back in person. We are extremely delighted to see so many familiar faces of the key industry leaders today, as well as new faces of young professionals from across the industries. Now, I also want to mention that we're having over 200 viewers watching live currently on Zoom right now. So hello to those currently watching live on Zoom. Please let us know if you can hear and see us clearly. As an introduction, today's agenda will kick off with the presentation of the real estate market in 5 different sectors, ranging from hotel to landed property. We're having Mr. Lawrence Lennon, our Managing Director of CBRE Cambodia, Ms. Kinkesa Kim, Associate Director of Research Consulting Services, and Ms. Daluch, Manager of Valuation and Advisory Services as the presenters. Following the presentation, the 3 presenters, along with Ms. Sonita Pik, Associate Director of Residential Sales and Leasing Services, will welcome the audience questions in our panel discussion. You can be part of the discussion by sending your questions directly to us on Slido. To join, please scan the QR code on the screen, or simply go to slido.com and enter the code hashtag CBRE-Q3 2022. And for the audience on Zoom, I highly encourage everyone to do the same. So, without further ado, ladies and gentlemen, please allow us to welcome Mr. Lawrence Lennon to the stage. Mr. Lawrence, stage is yours.
Good morning, everybody. And just to kick things off, I'd like to say thank you very much to everyone in the room for joining us today. It's a real pleasure to see some very familiar faces in the room. I'd also like to thank Satapana Bank in particular for setting up this wonderful space and providing us an opportunity to showcase what an incredible space. I'd like to point out that this is one of our key projects under management. So we've got our property management team in the room today. Shivali's waving over there, so please inquire if you need anything. I'd like to also note that, what an incredible space this is. If anyone's looking for retail space, get in touch with our office and retail team. I know we've got the country manager of EFG in the room, so maybe this is going to be the next pizza company space. Maybe not, I'm not sure, but it's pretty spectacular. That's all I'll say. Before I move further, I just also like to thank the RNC team, the office team, the retail team, and the residential team for all of their hard work in putting this incredible deck together. This is really a unique event in this context. The Market Insights event provides transparency in what is a fairly opaque market. So without this, it's very difficult to understand what's going on in the market here in Cambodia. So I'd like to thank all of the team for all of their hard work in putting this very pivotal event together. So next slide, please. Great. So if anybody joined for the Q2 event, you will know that we were describing the situation as potentially being a sort of eye of the storm scenario, which is a pretty dramatic statement. But I think taking a step back and looking at how things have unfolded over the past quarter, that eye of the storm sort of description is generally becoming quite familiar and feeling quite appropriate. That said, on a Q-on-Q basis, this is probably the best quarter in terms of Q3 that we've had since the beginning of the pandemic. COVID cases are massively down. This is probably one of the most stable contexts in Southeast Asia, if not globally, thanks to the effective vaccination rate from the Cambodian government. So that's a pretty incredible feat in and of itself. You'll also notice that for the first time, office and retail occupancy is actually correcting upward. That is, again, I'm honestly going to say a bit of a surprise considering all of the headwinds that we've been facing. This is definitely on the back of the fact that office and retail rents have been correcting quite significantly over the past few quarters, and tenants are taking up more space on average. So that's a definite positive side effect of what we are seeing here today. As we go through the presentation, what I really emphasize is take a step back and have a think about what the data is saying to you. Have a think about where we've been since 2020 and where we're going. Think about what the market momentum looks like. What is the trend? And that's really what this event is all about. Look at the bigger picture. Don't necessarily look at things on the short term. Real estate is not a short-term business. It is a mid to long-term business. So think in those terms. This, in theory, will help you in your business case. This will help your bottom line. So try and think about things from a bigger picture perspective. Next slide, please. So as I alluded to in the last slide, I mentioned this eye of the storm scenario in Q3, and there's certainly some significant headwinds in the global macro context. This is something that we can't deny. This is something that is objective truth. When we're looking at China, which represented around 60% of FDI into Cambodia last year, it's a significant portion of FDI. This is undeniable. On that basis, if China's healthy and strong, so too is Cambodia. And unfortunately, this is something that is, as I mentioned, an objective truth. China, in its current state, with the real estate market facing a significant amount of challenges, as I'm sure everyone knows the statistic, the 300 billion indebted Evergrande, and a number of other real estate players in China, the market's not doing so well in China, which represents around 30 to 40% of their GDP. In addition to this, the zero COVID policy in China is also creating some significant challenges to just overall day-to-day economic activity. This in particular is affecting manufacturing, for instance, which in theory might actually create some opportunities for Cambodia as manufacturers take the China Plus One strategy to the next level. There is a ray of sunshine in the short term. We have the party congress taking place at the end of this month, and we're hoping that should create some thawing effect. We're hoping that will create a greater openness, and in theory, we may end up seeing more tourists, more investors finally being able to leave that context, which of course will create a positive scenario for Cambodia. Additionally, if we look at the context of Europe and the US, it's extremely important that we consider things, it's extremely important that we consider Cambodia in this global context. During the pandemic, as you all know, real estate and other segments of the market were very, very bullish in the West. And as such, inflation is at an unprecedented rate. Inflation hasn't been as high in the US as it has been since around the 1980s. US inflation is around 8% today. As such, the US government is increasing interest rates, which is again creating potential challenges for those operating here. We may not necessarily think those things are connected, but that rising in interest will certainly set a precedent for international banks operating here in Cambodia. In addition to that, we have the impact of the strong dollar, which again is impacting lenders in this context, which again, we don't necessarily think that we are as connected as we actually are. So this strong dollar is directly impacting things like exchange rates. So for instance, if we have a Korean bank that's transferring funding from Korean won to USD for lending here in Cambodia, they have to factor in the exchange rate. So a weak won to a strong dollar causes a direct impact. So margins are being eroded, which is creating some challenges for lending. It effectively means that to gain access to finance here, it's more expensive. So all of these things combined are creating some quite significant funding challenges. In addition to that, it's important to factor in consumption in the West. Like, once again, we don't necessarily think about these directly, but if you think about the statistic that 45% of all exports from Cambodia are garments, and 60% of those go to the US and Europe. So if consumption falls, if orders fall from retailers, that is going to have a direct pass-on effect in the short term and the midterm here. So these are not necessarily things we want to hear, but they're things that we need to prepare for. And it's just objective facts that we need to be looking at and preparing for in the short term. Looking more positively when we're looking at things like the direct context. So Cambodia has had a projected GDP growth rate of somewhere between 4.5 to 5%. This is definitely something that we can be very happy about and very pleased with. This is without doubt due to the very strong fundamentals that Cambodia has in terms of continued growth in its manufacturing space, low urbanization, young workforce, and these are all really positive fundamentals that will help keep Cambodia growing. There are other positives. We saw the announcement of the Toyota manufacturing plant earlier this month, which again is very positive. We also saw the ratification of the Cambodia-Korea Free Trade Agreement. So a number of very positive things that will help build the fundamentals of Cambodia. Finally, tourism, which is also extremely important for Cambodia. It represents around 11.5% of the GDP. At least it did in 2021. We have now reached just under 1 million tourists as of, I believe, the 8th month of this year. Again, it's really positive to see this activity moving in the right direction. Something we'll dive into a little bit later on in the slides. Next slide, please. So one area of Cambodia that is definitely having some headwinds is that of the cost of fuel. As you can see here, the CPI, the Consumer Price Index for transportation, has increased to around 18% in June of this year. This is on the back of the Ukraine-Russia conflict. This is a global phenomenon, and it's something that we're all facing in every single market context. Why this is important is it directly impacts things like manufacturing, because it adds to the cost of trade, logistics. But in addition, it's important to factor into things like construction materials. Fundamentally, this increase in costs of fuel will get passed on because actually a large proportion of construction materials are imported from places like Thailand, from Vietnam, from other contexts in the close region. So if fuel costs are up, it means those costs are going to get directly passed into construction materials. So if you're planning a new project, make sure you're planning very carefully in terms of what your costs are, because it's likely that they will continue to rise in the short term. Next slide, please. If you take a look at the graph on the left, again, not too surprising in terms of overall approved investment into construction. This unfortunately has been a downward trend since the beginning of around 2020, or at least the beginning of the pandemic. Again, this isn't too much of a surprise considering the global instability that we're facing and the short-term instability that we're facing here in the market. So at the end of the day, this is not a particularly surprising situation to see unfolding. Equally and quite intriguing, you can on the graph on the right, you can see a direct correlation in terms of credit to construction and mortgages to owner-occupied housing. You can see there was a huge jump in the depths of the pandemic, and this is likely that the government was stepping in to try and increase and stimulate the economy. So quite an interesting graph to see. You can see that actually post opening of the country, there was I'm going to say a reasonable jump in lending to households. Again, this is also quite interesting to see how activity jumped post-pandemic with overall confidence rising, though you can see lending to construction being fairly static. Next slide, please. This is a particularly cool exercise that we do every 6 to 12 months. Normally it's every 6 months, but in the context of the pandemic, we were slowed down somewhat. So this was done around 12 months ago. This is the green netting survey that we do. So we call it the green netting because we're surveying buildings with green nets, aka buildings that are under construction. Of the buildings that we surveyed, there were 404 buildings in total that were under construction 12 months ago. Today, we completed this around a month or two ago. Around 40% of those buildings either were completed or reached a state of practical completion. Another 40% were still under construction in some shape or form, and around 20% were on hold. I'm sure none of you are surprised to hear these statistics, but it's particularly interesting to see them actually written down on paper. So quite a cool set of data points. Next slide, please. In terms of major activity, you can see there are 4 districts where the majority of all of this activity is taking place. 60% of activity, give or take, is taking place in Bokeng, Sen Sok, Tol Kok, or Cham Karon. So actually, no surprise there, but again, very interesting to see these stats down on paper. This is in terms of construction activity. Next slide, please. So as I'm sure if you've been joining our other quarterly updates, this is one of the areas that I find most intriguing and impressive about Cambodia, the rate of infrastructure development. I've never seen anything quite like it in any other context that I've worked in. And I've been in a few interesting emerging markets beforehand. This infrastructure is extremely important because it unlocks the potential of development sites. It unlocks the potential for real estate activity. We're seeing new roads, new airports, new bridges, new deep sea ports being developed. As I'm sure you'll be aware, the Phnom Penh Siennaville Expressway opened this month. And again, this is an extremely interesting piece of infrastructure because it massively unlocks the potential for secondary cities, whether it's Kep, Kampot, or Siennaville, because it massively reduces travel time. So again, this is something that's really positive, and it will definitely add to the real estate potential of Cambodia. Next slide, please. So I'm going to take a quick deep dive into the hospitality market, which again is something of great importance to Cambodia's market. So the story is relatively clear, I would say, for any onlooker. There's a great deal of interest from international operators, and that's very clear. And supply from the developer side continues to rise. You'll see some big names like Frasers, Pan Pacific, Ibis, Tribe were either opening or planning to open over the past 6 months. Again, that's a pretty positive sign, I would say. However, the elephant in the room is tourists. As alluded to earlier, things are definitely moving in the right direction. We have around 1 million tourists so far this year, but by comparison to pre-pandemic levels, in 2019 we had around 6.5 million tourists entering Cambodia. When I say the elephant in the room, I would probably also mention the fact that the Chinese tourists are missing. And I think most tourist destinations in Southeast Asia are asking the same question: when are they coming back? And this party congress that I alluded to that's taking place at the end of this month, this is likely going to be the starting point for a reopening of activity. So in a best case scenario, it's likely that we may see some re-engagement in Q1 of next year. So this is something that's quite positive. When we break down the tourist numbers, again, it's quite interesting. So as of H1 this year, around 50% of travelers were either coming from Thailand or Vietnam. So number one tourism destination east inbound was from Vietnam, closely followed by Thailand. And this is actually a historic trend. That's not necessarily something new, but again, it's something that's quite positive to see these regional peers coming in. Again, likely that they're trading. It's not necessarily that they're going to Siem Reap with their swimming trunks on, but again, it's quite positive to see this activity and this re-engagement of activity. So next slide, please. So over the past 6 months, we saw 4 new launches. Interestingly, all 4 were in Penh. All 4 were 4-star, and the majority of them were fairly varied in terms of format. So the reason why I say they're fairly varied in format is that they have quite an adaptable setup. So that means that they can host events. They have some form of office space for flexible working. So again, this is something that's quite interesting. We're seeing hospitality developers explore new formats and approach things slightly differently as opposed to just providing rooms and F&B space. Next slide, please. So it will be no surprise to you that, that the number of keys in the market is actually set to rise, as was alluded to in the first slide of this hospitality segment. As long as the supply rises and as long as we're not seeing international travelers returning, occupancy rates will remain fairly subdued. 4 to 5-star occupancy for the hospitality space was around 25%, give or take, which again, any hospitality professionals in the room won't be particularly surprised to hear. I wasn't too surprised to hear it, and I'm sure nobody in the room is either. So yeah, so we've got some way to go for the market to recorrect in terms of occupancy, but things are slowly moving in the right direction. Next slide, please. So just to conclude the hospitality summary or the hospitality overview, the first 2 key trends are, again, of no surprise to anyone in the market. These 2 trends have been important throughout the pandemic. It was the importance of staycations and the importance of events and F&B activity. Both of these classes of activity have sustained the hospitality industry throughout the pandemic, and that has not changed. Until we see a big boost in travelers, that will be the case. A lot of hospitality developers right now are maintaining revenue through these activities, aka through F&B and events. So that is no surprise. In addition to that, the low end of the market to the mid end of the market is likely to be where a lot of activity will maintain in the near to midterm, meaning in the hostel space, in the business hotel space. This is where a great deal of activity is taking place. So if you saw any of the headlines earlier on in the year, a lot of the hostels that are opening and operating have had up to 100% occupancy since the reopening of the market. And again, it's not too much of a surprise because that is where a great number of travelers are coming from, and that's somewhat what they're looking for. So moving forward, if you're interested in this space, my biggest recommendation is to look in terms of what the regional trends are. Think about what formats might be appealing to a potential traveler. Get creative. Think about the experience as much as possible. This is real estate 101, but try and think about who your customer is and think about where the demand lies. And that's all I'll say on the hospitality piece. So I'm going to hand things over to my colleague. Next slide, please. I'm going to hand things over to my colleague, Daluch. So thank you very much.
Okay, thank you, Lawrence. Let's continue on to the office market. Next slide, please. So over the past quarter of 2022, the office market welcomed 2 new launches of office projects. These are the CT Fortune Center and the Kala office, positioned as Grade B and Grade C offices respectively. Both of them are centrally owned buildings. And what's interesting about these new launches is that they are located within mixed-use developments. This signifies the importance to diversify during this current market situation. There have been no new completion. So to date, it's been confirmed that more office buildings under construction that were originally planned to be complete in 2022 as further delayed into 2023. So throughout the entire year, 2022, we expect to see an addition of 35,000 square meters of that leasable office spaces to be complete and added to the total supply, which has now risen to about 850,000 square meters. So if you look at the graph on the left-hand side, the increase of new stock this year has dropped significantly by about 5 times if we compare it to the period between 2020 and 2021. This slowdown is actually a good thing for the market because it allows time for occupiers to absorb the available space. And as a result, we see the occupancy rate for centrally owned buildings across Phnom Penh to increase slightly to 69.4%. This number has been improved from 67% in the second quarter. However, it's still too early to conclude that this trend will continue on towards the rest of 2022 and 2023, because if you look at the graph again, those delayed supply will still come online during 2023, and this will increase the total completed office supply in the market by almost 20%, reaching 1 million square meter of that leasable office spaces, and 40% of those total supply by 2023 will be strata title offices, and they are of a different nature from centrally owned offices that we're more familiar of. So strata title offices, just for background, they are smaller units of office spaces owned by multiple individual landlords managed separately. So to stress again, the 69.4% occupancy rate is for centrally owned offices only. This number for strata title offices would not be looking as positive. In terms of rents, rents largely stabilized across almost all sectors, all grades and locations, except for grade B, CBD, which has negatively adjusted by 1.7% Q on Q. This is mainly due to a number of grade B offices located within the CBD have aged and therefore received further pressures onto their rent as we have more newer and better supplies coming into the market. So in overall, as we're navigating through the uncertainties within the office market for the third quarter 2022, we noticed 3 meaningful trends that we would like to share today. First is quite positive, is that there has been an increase in interest on energy efficiency. So as competition and inflation has risen, some office landlords start to look into incorporating energy efficiency features into their buildings. This is to add more values to the tenants to stand out from competitors and also to cut costs. Secondly, as Lawrence have mentioned, due to the unstable economic situation globally and regionally, we have noticed fewer trends of multinational corporations into our market. Locally, this quarter, we start to see building repurposing taking shape. As we have forecasted at the beginning of this year, we start to see landlords converting some of their retail spaces on the upper floors and some residential spaces into office space. And this is to diversify and also to take advantage of the fact that office spaces does not require as much as investment for fitting out, and also the office market is not as hot as the other markets. Next is the retail market. So the retail market for Q3 2022 finished off with the grand completion and soft opening of Chip Mong 271 Mega Mall, which is the first mega mall in the city. We also welcomed new launches back. Unsurprisingly, all of them are community malls. So we have K-Mall Break Canal, better known as K-Mall 2, and 60M Community Mall. So all of these projects, interestingly, are all located within the southern part of Phnom Penh, along on New Hun San Boulevard, where there's huge clusters of existing and upcoming supplies of landed properties. If you look at the supply in terms of number, for 2022 throughout the year, we expect to see quite a big sum in completed supply, 207,000 square meters of net leasable spaces to be completed within 2022. As of Q3, about 45% of those actually complete. The remaining 55% are due to complete in the next 3 months. The majority is, of course, the Aeon 3 shopping mall. And among the new supply, more than 70% of those are shopping malls. Again, they are mainly the cheap malls, 271 and Mega Aeon Mall. Despite this sharp increase in supply, the overall occupancy rate across the retail markets still improved for the third quarter. It's now at 70.7% by the end of September, and this has increased from around 68% from the second quarter. However, we cannot say that the retail market has cooled down yet, because if we look at the next slide, rents continue to adjust further, especially for community malls and retail podiums. The adjustment are between 4 to 5% quarter on quarter. Despite that, on the other hand, shopping malls rents still remain resilient, and this is largely due to the nature of having a bigger catchment area and higher footfalls in general. But we expect this trend to continue towards the rest of 2022 and into 2023 with the upcoming supply. Because even though, if you look at the previous slide, even though the occupancy rate has increased to 70%, it has still a long way to go back to the 19%, 95% that we used to see in 2018 or 2019. One good news, next slide please, is that bricks and mortar stores still remain in demand. Very good news for shoppers and developers. So throughout the last 3 months, our team has tracked 10 new brand entrants from international and local brands into Phnom Penh, as well as 62 branch expansions. So most of these are classified into F&B and fashion businesses, followed by electronics, homeware, supermarkets, home and beauty. And if we look at the regional trend, next slide please. We see that physical stores also remain as an essential part in the retail market. So as CBRE have discussed with many retailers regionally, they have expressed that physical stores still is their main key sales channels for their transaction. And on top of that, they are still the key platform for shoppers to experience their brand and products more intimately compared to online stores. And this in turn has resulted in a higher conversion rate. Physical stores right now also play a different role. They are also acting as fulfillment centers, especially for F&B stores, with the rise in the online order platform and the on-demand delivery apps. So in overall, for the retail market in the third quarter, next slide please, we see that rents still continue to drop further with the upcoming supply and rising in competition. At the same time, landlords start to be more active in introducing creative and attractive weekend activities. We see shopping malls and community malls trying to have compete for footfalls and interest as we have more and more new malls opening. On the other hand, with the rent reduction and the availability of new shopping malls, new community malls, it also allows for brands to expand their branches faster. So we have noticed that local and international brands are expanding their new branches within quite aggressively within the first year of their start of operation. And this again is thanks to the more affordable rents and the availability of more malls across the whole city. So that concludes the updates for the office and retail market. I will hand it over to Ms. Kim Kinkesa, who will go through the residential markets. Thank you, Daluch. After listening to the updates in the commercial real estate, allow me to shift your attention to the residential market. I'm trying to give this clicker another try. Oh, it's working. Great. Okay. So would like to kickstart with the condominium markets, which is the high-rise residential. Unfortunately, this section didn't get to start with any beautiful picture of projects as other sectors because we don't see any new launches or completions within the last 3 months. This is actually the first quarter in 2022 that we haven't seen any completion or launches at all. The absence of new completions haven't changed the supplies number QoQ. That's why we're still seeing the same amount of supplies in the market. However, it's worth noting that since the beginning of the year, we forecasted about 13,000 condo units to be completed within 2022. And so far, only 34% of those have been completed, which means we still have about 9,000 units expecting to enter the market by the end of the year. And given that we only have 3 months to end the year, I'm sure we all can expect to see more delays in those completions. And that's why our forecast total supply for 2022 may end up not at 48,000 as we expect in this graph, but probably end up at around 42 to 43,000 units by the end of the year. And then probably more supply to be expected in 2023. Other than that, what's an interesting trend that we saw in the past 3 months? Also, we saw a relaunch of 2 projects that were put on hold previously, now resume their constructions and sales activity again. This is actually quite interesting because if you follow our Q2 market update, there were other 3 projects relaunched also. So 5 total, in total 5 projects has relaunched at this time. We think that this is a result of investor starting to recover some of their confidence, as well as probably the pressure from previous buyer putting on high-rise condominium to actually complete their construction. In terms of pricing, we see consistent adjustment in both sale prices and rental rate. However, the rate of adjustment are moderate, as you can see in the graph here. Only adjustment of only 0.8% to 1.2% for sale prices and 0.3% to 2.7% for the rental rate. This is to say we start to see things are stabilizing. But if we compare to the past 3 years since 2020, these sale prices and rental rates has actually adjusted for about 10 to 25% across all segments. So we can say this has been a painful adjustment for condominium market, and this is haven't included yet other promotions and discount and incentive that developers are providing. So it has been a hard 3 years for most of the condo developers in our country. In terms of other trends, despite the ongoing uncertainties, we still see construction progress moving on. At least that is quite an encouraging trends compared to, crisis in China. We see developers are struggling with cash flow and unable to continue their projects. At least in Phnom Penh, we see projects are still moving on. As Lawrence mentioned earlier in his presentation, we actually saw over 160 projects have been completed or practical completed since in the past 12 months. However, we also noticed that larger projects tend to have slower construction progress, and we can expect some of those large-scale project completion date to delay further. But however, smaller projects and medium-sized projects are moving on forward. Besides that, we also see buyers are now taking opportunity of the dropping sale prices to acquire larger unit size. So that means previously, if people or buyers have the budget for 1-bedroom unit, now they are able to consider 2-bedroom units
or so on and so forth, in both rental market and in the sales market. So this is quite a interesting trend. If you remember Daluch presentation earlier, office tenant also taking opportunity of the price drop to take up larger space as well. So we start to see the impacts of price adjustment here, and hopefully next year we'll see more stabilization. That also leading me to the last trend that we put here. Actually, it's a question whether to buy now or later. We got asked a lot by condo investor, particularly whether price will continue to adjust in the following year. Actually, as we see, the price has been adjusted about 20%, 25% in 2020. It has actually eaten in a lot into developers' profit margin. So we actually think that price will start to stabilize, and we may continue to see a slight adjustment in the following year, but not as dramatic as what we saw in 2019 and 2020. Moving on to the other segments in residential sector, as low-rise landed property, or better known as Borai locally. We saw 5 new projects launches in the past 3 months, and 18 new completion. If you follow our market update since the beginning of the year, this is actually quite a low number of new launches, because normally we have on average 20 to 30 new launches each quarter. So this quarter we only saw 5 launches. Noticeably, the number of new launches started to slow down. I will discuss more on into the next slide on this aspect. I was to highlight your attention to some of the examples of new launches that we're showing in this slide. We have Minh Chay Residence, Downtown Residence, and Lux Residence. All of them are positions in mid-range, and all of them are located in Minh Chay or Posanjay district. So despite the actually on top of the number of projects getting fewer, the sizes of those projects are also getting smaller. If you look at this graph on the right-hand side, we're seeing that since 2019 to 2021, we saw a consistent new launches of over 80 projects per year. But this year, in the past 3 quarters, we only saw about 40 projects new launches. And the number of units in those projects are also getting fewer. We are coming down from the peak of over 500 units per project in 2020 to now just over 200 units in 2022. So as the competition is rising, we start to see developers now tend to be more cautious when they launch new projects. You can put it in this way, trying to test the market before going to launch another phase. If you are a Borai developer, I've seen some familiar face in this room. This may be one of the interesting takeaway for you this morning. This is the map of ongoing projects which are under construction. Our research team actually tracked over 190 projects in Phnom Penh under construction. So imagine the number of units that are coming up in the next 3 to 4 years, up to over 69,000 units is still expecting. You may also notice the locations of all these projects, and if you considering to launch another Borai project, it may be good to consider where your competitions are. In terms of pricing, we also start to see sale prices continue to drop slightly for the landed property market. This is obviously the results of the tighter competition in the landed property market. When you look at the price per unit, you may not notice the difference as much, because actually we notice that unit size in Borai projects are getting smaller. So when we dissect it further into price per square meter, that we can see more of a difference between from each quarter to each quarter. Besides the competition that I already mentioned, obviously it's getting tighter, but I think it's also worth highlighting that competition comes in different shape and form for different segments of landed property development. In high-end and mid-range, we tend to see competition coming from new entries. For example, both local and international new developers that are coming into the market. Some of the previously condo developers are now also turning to develop Borei market, Borei projects. This is more of a competition from new entries. However, in the affordable space, competitions are especially among the existing developers and tend to be more impacted by the affected income of affordable buyers, especially in this kind of economic situation, they will be the first group to be impacted in terms of family income. Another trend that we start to see because of the competition, developers are now willing to are more flexible to work with agency as opposed to previously they tend to work exclusively with just the internal sales team. Now our broker have more projects to work on, and I think it's also true for other agency as well. Last but not least, we start to see developers becoming more cautious on the cost, whether in terms of from the beginning at the design stage to choosing the material, to choosing their contractor, because now as competition getting tighter, prices getting lower, the profit margin is actually not as good as past 5 years or so. So this is what also noticed inside the landed property space. So this is to wrap up our presentation for market updates in Q3. Thank you very much for your attention, and I'll see you again in the panel discussion.
Thank you, Ms. Kinkesa, for this wonderful presentation. And these are very interesting and useful information. So thank you to the 3 speakers for this presentation. Ladies and gentlemen, again, let us give them a warm round of applause. Now, in a few minutes, we will begin the panel discussion. But before we can move on, our team will need some time to set up the stage. So we have some team setting up the chairs on the stage, please. Okay, thank you, Lawrence. In the meantime, I'd like to invite everyone to pull out their smartphone and join us on Slido for our poll discussion. So everyone, please pull out your smartphone and join us on Slido. Can we enlarge the slide, please? Thank you. Right, we're gonna give some time for the audience to be on Slido, and we will begin the first question accordingly. Okay, I think we're ready for the first question. Poll. Okay. All right, this is the first question of the day. I know we asked this in the previous quarter, so we're always trying to improve the coffee we serve to our guests. So please tell us honestly, how do you think the coffee this morning? There's plenty more for everyone who didn't have any coffee this morning. Can be better. All right, we're seeing some people who love it. Oh, didn't have any. Okay, I think we can conclude that. We'll try our best to improve the coffee and the taste for the next quarterly presentation. Okay, I think we can move on to the second question. What do you think will happen in the real estate market for the rest of 2022 and 2023? So everyone, please input your answer on the poll. Ooh, big jump. There will be some recovery and transactions in the real estate market in the next year. Oversupply issues, okay. All right, I think we can conclude that. Oh, I can't say that now. Okay, a lot of us here seem to think that there will be no oversupply issue in this year and 2023 as well. That's very interesting to see. Okay. All right, thank you, everyone. Let's move on to the third question. This is a question for your preference as of now. What assets are you currently investing in? Or what assets are you planning to invest in this year and 2023 as well? Oh, land. Cash is king. Wow, okay. Right. This is very similar to the previous quarter as well. A lot of people have answered land. I would obviously choose land as well. It's one of the most stable investment here as well. Cash is king, landed property, and condominium as well. Okay, interesting. Thank you, everyone. Thank you very much for your participation in our poll. I know for sure everyone is very much eager for our panel discussion. So I'd like to remind everyone, sorry, without further ado, everyone is here already. Thank you for all the panelists. Anyways, with the completion of the okay, thank you, the audience, for this participation. Everyone has been lovely, and it's very interesting to see the responses from our audience. Now, I want to give the stage to the panelists now. Okay, thank you.
Thank you, Paula. Thank you, everyone, for joining the poll session. Now, I'd like to kickstart with the questions to our panel. I would like to kickstart the panel discussion with question for residential market. This is not on the screen, but I think it's an interesting matter to discuss because, as I present earlier, we start to see comebacks of projects that were frozen, as they call it. And they decided to choose this time to come back. So I would like to understand from Nita's perspective. As we see in Q2, we saw 3 projects coming back, and now another 2 projects come back to the market after they paused the activity for a while. Why do you think they decided to choose this time to come back? And yeah, basically, Nita, please.
Okay, thanks, Kesa. That's a good question. So, in my thoughts, the major reasons of the relaunch 3 projects which you have presenting to the audience. So the major reason is that the developer need to carry on their construction progress, which pressing from the existing purchaser, as well as I think they have learned on their lessons from their competitions. They have studied well on the market situations as well, the marketing strategies. So they come back with a strong positions, and also they are confident to sell their project and relaunch them to the new buyers also. On the other reasons, I think that they might thoughts of the local market are working better. So which aim for the local investor rather the international investor instead.
Thank you for the answer, Bonita. I'd like to shift an attention because I see an interesting question here about Siennaville. Although we didn't cover Siennaville in our discussion today because this presentation is particularly for Phnom Penh, but I think there's a lot of people also interested to understand the developments in Siennaville. So I'd like to direct these questions to Lawrence. Lawrence, can you talk about Siennaville market and what to expect after the gambling crackdown?
Thank you very much, Kesa. Not an easy question to answer, I think, just to sort of start off with my immediate response. I think the reality is whenever I go down to Siennaville, I see the raw potential. It has the ingredients to be an incredible coastal city. Its infrastructure has improved significantly over the course of the past year or so. As I'm sure many of you will know, they had a huge upgrade of the road system. So if you do go down there, which I recommend if you're in the real estate segment, you should be checking out Siennaville. So that's one component of the raw ingredient. So we've got the infrastructure. I think what is next in terms of requirement is getting the master plan refined and properly enforced. That is something that is definitely necessary for it to get to the next stage. What I'm starting to sort of notice or give or take is this master planning component is extremely important because it's actually something that helps to protect the value of property and helps sort of to develop the potential of a space. So for Siennaville to really move to the next level, it's about refining these things. So it's making sure that the public space is there. It's making sure that the right level of supply in terms of specific uses is there. And I think this is going to have to come from top down. We do know that the master plan is being developed with support between the Siennaville provincial government and the Shenzhen master planning group. So there definitely is a lot of work being done in terms of these raw ingredients. I think the next step is just having the right chef to come in and to help combine all of the raw potential. As some of you may know, at present there's around 1,000 unfinished projects in Siennaville, which is a pretty staggering fact. So the only way that we're going to get past that challenge is through proper intervention from the government. So this is going to need to be a proper public-private participation in order to really bring out the potential of this potentially world-class destination.
Thank you, Lawrence. Very interesting insight. I'd like now to move on to another questions which get the highest vote. Actually, I think this is probably a question for Daluch. Do you see high inflation restrain people from purchasing in the retail sector?
Thank you for the question. High inflation definitely affects purchases of real estate investment in general, not just retail sector. Specifically for retail sector in terms of actual purchasing of strata title retail spaces. It has been affected previously, even before the inflation, largely due to the supply and demand equation. But high inflation has add on to the struggle. To put it in summary. Yeah.
Okay, thank you. I think now with the several questions on landed property, I'd like to combine some of these questions together. I think the main questions here is what is the view on what is our view on the prices trends in landed property for Mortar, and continue from that. What do you think caused these trends to carry on? I think it's quite clear from the presentation the price trend is going downward, but maybe Mortar can express more on why this, what has caused this trend to occur.
Yes, the trends on the Bore transaction was down. I think it's around 4% on the shop house. So in this reason, the developer have been taking a precautions on their development, as well as to taking a cost very sensitively on that. Although there are the international investor into the market, so they have been seeing this coming of the new investment more locally to Cambodia, so they are taking a very step back to see on that. On the other hand, the foreseen into these reductions will be until next year.
Okay, great. Thank you. A follow-up questions on that. It is quite clear that competition is getting tighter among developer. Have you seen any different strategy, or to simply put it, what have developer done differently to stand out in the competition?
Very clear, one of the strategy that the international investor, developer as well, starting to cooperate with the trust company to cooperate and also to expand and attract the international investor to Cambodia.
Thank you very much. I'd like to move on to another question in the commercial market, specifically in office occupancy. I think we discussed this slightly in our presentation as well. Daluch, what will be your advice to office occupier when looking to expand or move office in the long term?
Thank you for the question. Location is key for occupiers, for developers. adding more, giving extra on top just office space is very essential in catching the tenants who are looking to move or expand their office, especially with the higher requirements on parking space, on other incentives such as fitting out incentives, for example. For tenants, this is a very good opportunity to expand their office space, taking on the advantage of the reducing rents. One interesting trends that we start to see for office tenants is that with the reduced rents, allowing them to occupy more spaces, they start to incorporate some elements of flexible office space, working space to attract young talents. Now the upcoming generation Z is taking over the labor market. So we start to see large corporations, companies introducing flexible working space into their office.
Maybe on top of that, the view of the office, maybe another interesting picture that you can see from here. It's very relaxing. And if you're interested in any of this space, feel free to talk to our office team who's sitting in the audience, and we may be able to arrange a tour for you if you're interested after the event as well. So thank you, Daluch, for that questions. I think the next question is something probably we can discuss among all the panelists, but I would like to kickstart with Daluch in terms of growth in provincial town, or in other words, what is an alternative destination for investment besides heavily invested Phnom Penh that we are seeing right now? Let's start with Daluch and then move on to other panels.
Yes, definitely. Infrastructure has opened up more opportunities, development and investment opportunities to secondary cities. Key ones being Siennaville with the expressway and the significantly shorter travel time to 1.5 hours, 2 hours, definitely opens up opportunities for developments into, for example, holiday homes. People in Phnom Penh can easily go to Siennaville and enjoy their holiday villas along the beach. So we expect to see some of those developments coming up. Also similar trends to Cap and Kampot. Other secondary cities, we also see potential in Siem Reap, in Mandaluyong and Kampong Cham provinces, which house the most numbers of populations in the country. I believe Lawrence and Nita can add on to that.
Lawrence, what is your view on this?
Well, number one, don't overthink. Think about where people go organically. Millions of people pre-pandemic were going naturally to Siem Reap. So for me, this is an obvious bet. It's an incredibly unique context, globally speaking. So if you work towards the natural advantages, I would say that this is an obvious bet. Try not to get too creative and create demand where it doesn't necessarily exist. So follow demand. Think about who those potential buyers are. So for me, Siem Reap is an obvious bet.
Anything to add, Monita?
I think we also can see a little bit more on the bulk purchase in Phnom Penh, the condo sales, which I handling on that inquiries and also that kind of stock. So probably some of the distressed property in Phnom Penh, as well as on the bulk purchase sales of the condo 1 or 2 floor, that you also can grab the opportunity of founding the expansions to the Cap and Kampot province on the holiday home. The land would be good to invest, as well as these are affordable now to consider.
Very interesting. Yeah, I'm also interested in the holiday homes market. Yes. With the pandemic going on, I think a lot of people are looking to get away, for on the weekends, and Cap Kampot, also Siennaville now with the expressway, 2 to 3 hours away from Phnom Penh, has been quite an interesting destination so far. So next questions. This is also most voted questions among all audience. I think we'll direct this question to Lawrence. So although we didn't cover any industrial sectors in this quarter, but our audience is interested to know what can we expect in the industrial sector, especially warehouse and distribution center. Lawrence?
So for me, and I would expect my colleagues, the industrial segment is one that holds a good amount of potential, not necessarily just from a warehousing perspective, but also from things like a logistics perspective, cold chain supply perspective. These are all areas that are necessary for a growing consumer goods class, as it were, or growing consumer class in Cambodia. So certain things are inevitable trends, like the demand for cold chain. So this is a pretty, as I say, a pretty obvious one. In addition to this, as I mentioned earlier on in the presentation, manufacturing represents actually quite a significant portion of Cambodia's economy, especially when it comes down to garments. It actually employs around 1 million people in Cambodia. So without doubt, we're going to see a continued expansion of this as a natural trend. You'll notice that certain sort of higher added value manufacturers are starting to come in, which again is going to be interesting because they're going to start to demand higher quality, better industrial space. So this is definitely an opportunity that we're likely to see to continue. Just to sort of add on to that, I think Cambodia's geographic location presents a real opportunity in the manufacturing space to add value and complement the manufacturing activity that's going on in Thailand and Vietnam. We don't necessarily have to compete, we can complement, if that makes sense. And I think that could be a big opportunity. One final point I'll make is the agricultural space, which I strongly believe in as having potential and crossing over in terms of industrial. Agro-industrial, capturing value for a lot of the food that is produced here is presenting a huge opportunity for Cambodia in terms of industrial property. Right now, in terms of official exports, the biggest agri-export is rice, and that's only 1% of exports, despite the natural splendor that Cambodia has. So what I'm hoping to see in the short term is Cambodia capturing that value, adding to that value, and then exporting as added value products, which I think is where we'll see a good amount of growth in the industrial space.
Thank you, Lawrence. You discussed a lot about the key sectors inside industrial and manufacturing. Maybe a good follow-up question for that is which location that you identify to be good for industrial and agro-industry establishment?
So whenever we're talking with industrial developers or logistics developers, there are certain areas which are quite obvious in terms of their demand. So when it comes to something like logistics, more often than not, they're looking to just south of Phnom Penh within Ring Road number 3. This seems to be the highest demand, basically because of the logistics potential of the Ring Road, but also proximity to things like the new highway and the new airport. When we're talking about further afield, just to the south of Phnom Penh, again is of high interest. So Kampong Speu is an area of high interest, and that's actually heavily driven not only by infrastructure, it's driven by the availability of land, and in addition to this, labor. Other areas in Cambodia sometimes have competing industries. So if you're looking for your industrial workers, sometimes you're directly competing with another industry. So this is why that area is of great interest to manufacturers.
Thank you, Lawrence. I already have other question for you, but I'll come back to you after this question. This next question is for Daluch. Because you discussed in our presentation, there are 10 new brands entry from local and international brand this quarter. Our audience is interested to know, do you think there will be more brands coming into Cambodia market next year? I think the question is also doesn't specify whether it's international or local. Maybe you can discuss on that.
Thank you. We definitely see more brands, both international and local brands, to enter the market. However, the speed or the growth is a different question. But whether there are more brands coming in, definitely yes. With the opening of the 2 large shopping malls, they have the capacity to bring both locals and international brands, whether directly or as a part of their franchising or business strategy. So personally, I'm very much looking forward to the full opening of the Chipmunk 2001 and experience more brands, new brands, as well as the Eon Stream. Yeah.
Thank you, Daluch. Then this next question is for Lawrence. Like I said, our audience, I think actually we have several questions on Chinese investment into Cambodia in particular, but I like to combine some of those questions together. So basically, we see slowdowns in Chinese FDI in the past year. Obviously, this is what we noticed. What do you think will be the trends for Chinese FDI coming up in the next few years, and whether how can Cambodia diversify its FDI origins to strengthen the economy?
So again, an interesting question, and I have been arguing since the beginning of the pandemic that I actually strongly believe that what we're witnessing is almost like a forced diversification during the course of the pandemic, as the Great Wall of China, as it were, went down during the pandemic, during the zero COVID policy. A lot of the Chinese investment was unable to actually reach Cambodia, which is forcing businesses, the government to look elsewhere for potential sources of foreign direct investment. So I think what we're likely to see is an ongoing trend of diversification to other ASEAN investors. So I think we're going to increasingly see the Vietnamese, Thai, Malaysian, Indonesian, Singaporean, which without doubt they were here, they were investing, but I anticipate we'll see a greater diversification as long as the Chinese, as I say, Great Wall is down until things stabilize in the Chinese context. Without doubt, once things have stabilized in China, that strong relationship we have with China will continue, no doubt. So I would anticipate in the short to midterm that will re-engage and that will reignite at some point.
Thank you, Lawrence. I think I will direct the next question to Nita, as I see several questions about residential coming in. Actually, if I combine these several questions, maybe to put it is what is your advice, Nita, for people who are looking to buy a residential unit, whether it's a condo or a landed property at the moment?
So in terms of the condo sales, of course, the price have been discount up to 25%. So I think this is a good opportunities that everyone can grab the opportunity. So as well as the secondary market is working better. Also, you can keep their properties and also invest and also find the potential tenant to fill up the occupancy. So would rather said all condo sales for secondary market as well as the landed secondary market also a good opportunity for you to consider. Thank you.
Okay, great. Thank you.
I think to keep people engaged and keep your attention, we'll probably wrap things up relatively soon. But I think it's probably worthwhile asking if anyone in the audience has any questions, and we can get a microphone passed around. So if anyone has a question, please raise your hand, and we can see if you have any interesting questions.
Anyone would like to ask questions in person rather than using Slido? If you want to ask, just put your hand up, and our team will bring a microphone to you.
I think otherwise we can start to wind things down, and people can have a coffee and mingle a little bit.
Sure. So I have just one last question, if you can bear with me. Sorry that we cannot cover all the questions. But this next question is to wrap up the event. So what would be your advice to investor looking to invest in real estate sector in 2023? Let's start with Lawrence and later to the ladies.
So I think in an increasingly competitive market, diversification, the alternatives are going to be interesting. So trying to find business opportunities that are difficult to enter, higher barriers to entry, more sophistication. So, instead of just a basic warehouse, how can you add value? Can you find a joint venture partner that would allow you to develop an international grade cold chain system? Can you develop data center? All of these alternatives are probably going to be where you can find a defensible position in the market, especially in an increasingly competitive space.
What is your take on this, Daluch? Is there any opportunity for investor in 2023?
There's always opportunities in whatever the market is. But one key message would be different. Whether you're looking to develop an office building, a new mall, a new landed property, be different. We still see throughout this year that projects and developers who are market leaders still doing very well compared to their competitors. So that can come in the form, maybe for example, for landed property, in the forms of newer and more flexible layout options, different kinds of units, more amenities, more green spaces into their projects. So be different.
Thank you. Any last take to wrap up, Nita?
So I think the international investor would increase, hopefully, and very positively that they can consider Cambodia as their options of investment in the future.
Thank you.
Thank you.
Thank you. Thank you all the audience for your attention. It has been a very engaging morning. Just to wrap up things, we will share the materials from this presentation to your email. So if you're interested to get the copy of the presentation, please make sure you leave your email address with us at the registration desk, or name card will be fine too. So thank you so much for your participation this morning. I wish you a lovely day. Thank you.